Well, hello and welcome and welcome and hello and good morning and welcome and welcome and hello. It's un poco mas. And you guys know how we do it. We give you just a little bit more every single day of the week. We talk Sofi Stock. We just had a really good earnings report, so it's been an exciting time. Of course, Danny Deals made some harebrained predictions on the price action. And wouldn't you know, those predictions actually ended up coming true. A lot of people are just saying, okay, we broke support. It's doom and gloom. I'll see you at 4. I'll be buying at 5. And I was like, nope, that's not what happened here at all. Okay, so the shard attack started up here pre-earnings. This was all dialed in. I gave you, go back to my live streams. I give you all the information, guys, on the borrowed shares, the net borrowed shares every day, the volume of the short, not only the volume but sort of the direction and why they're doing it and how that intertwines with the options activity. If you can put those pieces together, you can get a really good idea of where the stock price is going to go. So down here, um I felt like this was just bouncing off support. It doesn't really make any difference to me when shorts push a stock down below a line just, to make a point or as a stop loss rate or whatever, because these candles are extremely bullish. And what I told you here, guys, and I don't change my chart to, if I'm wrong about the price action or the key levels or whatever, the pivot points, I don't go back and change the chart to try to make myself look right. Thankfully for me, I don't have to because I'm right on the money. I told you this was going to break down, 729, which it did quickly. It was rejected yesterday at 776, which was another level. It needed to break down, and I told you it was going to bust that down today. And by the end of the week, I believe we will bust down $8.25. The reason that's a key level is because that's where the short attack started. That's where the heavy, heavy borrowing started on the day of the earnings report when the stock would have gone up a ton, would have gone up 10, 12% easily and held that. The net borrow was like 8 million shares. So this has a massive effect. They've been net borrowing like 10% of the volume, the churn, almost every single day. So now that they can't do that, what happened yesterday, guys, and you can just follow this you can follow this on the borrowed change from yesterday. It starts out and it's just up, guys. They're borrowing, they're borrowing. The net borrow is almost 4 million shares. And that's when I was doing a live stream yesterday saying they're just shorting the piss out of the stock again. Okay, interest rates held steady. What happens? Net borrow down to -7. They just start covering yesterday. Okay, so they covered up 1.5 million shares. And then today, basically they're covering again 843,000 shares. Now this isn't up to the minute or anything, but and you can see, guys, like basically in the last 2 weeks, since I said they started this short attack pre-ER, which was meant to go post-ER. Make no mistake, guys. The shorts and the bears were caught unawares. They did not expect the ER to be anywhere near that good. They did not expect that growth, and they were caught completely off guard, and they have their pants down. And they really have no play here now because institutions are going to come in all quarter. ARK was buying, $3 million worth of the stock, and they're basically hung out to dry and they're eating their own and they have to try to push it down a little bit and cover, and they were trying to do that today, but it just wasn't working because, other bigger algos, like big fish eating the little fish. If you ever played Odell Lake on like a DOS computer, the big fish eat the little fish. And the shorts that are left here that were shorting from like 720 just heavily last week, though, they're stupid. Maybe they thought, hey, they can't stop us. And you notice the Chia Pet, this is another, they're basically trying to do the exact same thing that the Chia Pet army did last time, which is they put out this ridiculous targets, these ridiculous notes with this fear mongering. Um, SoFi's capital ratios are in trouble. SoFi's going to have to raise money. Of course, if they're going to keep growing this quickly, they will have to raise money. But it doesn't mean they're going to have to do it at a fire sale rate or on unfavorable terms. I mean, there's a lot of different ways to raise money, particularly when you're taking in right now 3 billion in roughly in deposits per quarter. And people are like, "Oh, next quarter it could be as high as 2.6. Next quarter it's going to be over 3 turds." They just added 717,000 high quality customers last quarter. The SoFi Stadium's popping. We're getting, the highest interest rates just held steady. It's good for SoFi. We don't cause panic in the markets with a rate raise, but we're still paying people 4.6%. That's, 4.5% between SoFi and the big mega banks. Anybody with some savings and a brain is going to SoFi or some other bank like SoFi. So, I just want to talk a little bit about valuation, guys. Valuation, valuation, valuation. Why is the market so wrong? Remember, guys, the puts lost this week. The option sellers generally lost. Max Payne is still listed at 7. I don't think they're going to be able to push this down to even 750 tomorrow, much less 7, unless there's some massive FUD, war, something breaks out. Like I said, an alien invasion. I don't know if the Bears, the Chia Pet, the bologna sandwich, I don't know if these guys can summon an alien invasion to, bolster the shorts, but you never know, guys. I think they could move heaven and earth to, try to slow down the SoFi stock. But the bottom line is it's just not working. It's not working at all. And if you look at, even with this $3 idiotic, you know, reiteration on the sell rating by the Chia Pet, the average is still like 988 or 24% upside. And of course, they should throw out, monkey calls um, that are just completely, obviously not genuine. And, the arguments that you're making are, contrary to the facts at hand, contrary to the data. And everything you said, last time you lowered from like, you were 12 or whatever down to 250 and then upgraded, fake upgrade to 3. All those things that he said were going to happen by the end of the year, he's been, 100% wrong across the board. So you have to decide who you're going to listen to. His rating actually has gone lower. It seems impossible, but the smile says it all, guys. This is not someone, in my opinion, who's trying to be right. If you look at his SoFi call, success rate is 23%. Okay? I mean, look at this guy's calls. He's terrible. Success rate 32%. He's right less than a third of the time. His average return is negative. And I know he's smarter than that. I've heard this guy interviewed. He's not dumb at all. He's not dumb at all. So, I mean, I have no inside knowledge, but the only logical conclusion is if you've been doing this a long time and you're this smart and you're this wrong, in my opinion, you're not trying to be right. But be that as it may, if he could, last time he drove the stock down into the fours, not him personally, but just everyone who was in on it, the media, it was like just, this concentrated attack on SoFi. And it did its work. It drove the stock down into the ground, and the narrative it's just not going to work this time. The narrative's not going to work. The ER is just way, way too good. But guys, talking valuation, I'm just going to make this as simple as I can. I don't know if you guys can see this over my shoulder. Probably not, but people keep arguing, should SoFi be valued as a technology company or should SoFi be valued as a bank? And the truth is, they should be valued as the bank plus the technology company, not a blend of one or the other. And I'll tell you why I say that. Like, guys, SoFi the SoFi company right now, in my opinion, or when they hit net profit, maybe in a couple months, I'll put that time frame on it. They're worth $8 billion. Okay, Galileo, in my opinion, with the growth they showed, all the positive momentum they're generating, I think they're going to land one of these mega banks or at least a larger financial institution. When they start announcing those contracts, guys, for Galileo, Noto's a very conservative guy. He doesn't, tip his hand. He doesn't, he always keeps something up his sleeve. And he was gushing over the technology Galileo, RFPs in the last call. He sounded giddy as a schoolgirl, and that's very unusual for Tony Notes. But in any case, guys, what was I talking about? Talking valuation. So if I add that together, guys, I'm saying SoFi is worth $13 billion at net profit. And I didn't plan this in any way, shape, or form. I'm just giving round numbers, just giving some honest opinions, a little napkin math. Little napkin math as a nod to all the Tesla fanboys. So napkin math, you divide that by the number of shares, that puts a value on the shares of $13.68. And lo and behold, I am so logical and so consistent. I told you guys months ago that my target at net profit is $13.75. That's what I think the company's worth once they make a net profit in Q4, which I believe is in the bag, quite frankly. Everything under 825 was shorting. It didn't mean anything. So the options are often predictive, but not all the time. A lot of times the smart money can be wrong, and that's what happened this time, guys. It's not super complicated. They set up a short attack. They had all the puts in place. They shorted the shit out of the stock, and it just didn't work. It didn't work because there was too much new money. Retail buying that, they pushed it down on the day of earnings to 670. They thought they were going to like cover and be clever and, probably push the stock down under 6. It just never happened, guys. All their churn, the volume, there was, and then Aunt Kathy comes in. Aunt Kathy comes to visit for the holidays, and she's a complete crazy Ivan. You don't know what she's going to do. And she has bankroll, and big bank eat little bank. I don't understand the language of people with short money, to quote Mace. Um, bah, bah. When Mace and Puffy, they had those green jackets, they're just dancing around and those lights. Oh my God. What a time, what a time. I believe that was the early 2000s. But guys, SoFi and Galileo are greater than the sum of their parts. Galileo and SoFi have a synergy that make both more valuable. And don't forget, Galileo is an independently run separate company, so you could very easily spin that company off into the future and just really, really reward the SoFi shareholders that were patient and understood the vision and knew that Galileo would take a few years to get where it's going, maybe 5. But I think by like 2025, guys, Galileo is going to be a very, very valuable commodity. And, the people that sort of scoffed at the transaction, Karens, myself included, thought it was too expensive, etc. We're going to once again have to acknowledge that Noto is way smarter than we are. And just the guy's playing chess while everyone else is playing with their puds. And he's just winning. He's just winning the game. He has a vision. He's executing. He's smarter than other people. He's faster on his feet than other people. He understands things at a deeper level than a lot of these other CEOs that are just more simplistic. They're just driving, and he's taking a holistic view of the company. He's setting the company up to do well under any conditions. He's setting up cost savings for the long term, guys. It is in his interest. He's extremely personally invested in SoFi, and he's bought a lot of shares lower than this. He's bought a lot of shares higher than this. But I think this is his baby. I don't think he wants to sell the company. I don't think he's going anywhere. And basically, guys, I just want to hear your thoughts on valuation. That's just my round number. SoFi's worth 8. Galileo's worth 5. The way they're growing, the way SoFi's growing at net profit, and that means 1368 a share, which aligns almost perfectly with my target at 1375 a share. What's your target price at net profit? Tell me down in the comments, guys. By the way, it is November 2nd, 2023, Toper time check. Toper time check, 9:52 a.m. It's 8 minutes to the top of the hour, 22 minutes from the bottom of the hour. It's about 2 hours and 8 minutes till you turds get to go eat your lunch. Nice peanut butter and jelly sandwich. Maybe the missus cut the crust off for you. Ooh-wee. Ooh, pig suey. That's good stuff. Anyway, guys, we're trading 25 million shares on the day. The volume looks really good, guys. This is where we want to be, 35 to 45 million shares. We don't want to be at 17 million shares where the stock is just on life support and you have to put your fingers under their nose to see if the stock is still alive. You don't want that, but you don't want 150 million shares or even 100 million shares because that's the market makers up to no good. That's their algo churning shares to try to either accumulate or wash people out or cover, get people to buy, get people to sell. If you have a genuine variance, look at the bottom where it indicates like the volume per tick, whatever you're on, the minute or the 5-minute chart. You want to see variance here. These big candles are big buys. Often with SoFi, when the algo's locked on, you just see that absolutely uniform other than the very beginning and very end of the day. So it makes that little bull pattern, what I call the shallow bull pattern. Deloitte Christmas haircut memorial pattern. So, guys, that's about all I wanted to get to today. Just I think the valuation. People are saying this is overvalued here. It's absolutely absurd. They're going to grow the top line like 32% this year. EBITDA is absolutely exploding. And if you understand basic math and how finances work, the rapid expansion in EBITDA as the company scales as quickly as it is going to lead to an equally rapid expansion in net gap profit. Is just going to lag a bit behind by probably a year or two. The way EBITDA is exploding right now, in a year gap net profit is going to be exploding, or in 6 quarters gap net profit is going to be exploding. But it's not going to be years, guys. The deposits are growing very, very quickly. It allows them to fund loans at a low cost. Galileo is clearly going to add more. They had a great quarter adding accounts last quarter. They're back up, well above their previous high. So I think the company is absolutely hitting on all cylinders. Yes, I would like to see more cross selling. Yes, I would like to see more revenue per customer. Yes, I would like to see lower customer acquisition costs. Yes, I would like to see less stock based compensation. I think our staff, our management might be just a little bit bloated. Let's lean them out. Let's lower that stock based compensation and make the shares that they already have worth more by, making the company profitable. But overall, guys, I'm extremely happy with management, extremely happy with the ER. If you look at what's happening today, it's basically, like I said, exactly what I told you is going to happen at the beginning of the week, which is don't worry, support hasn't broken down. We're going to break down these 3 key levels. We are already, guys, moving past that 50-day moving average. Like 50-day moving average is sitting right here, right now, about 805. So that's a huge sticky resistance point. It has been, as you can see, going back. Tried to get through twice, and over a period of about 5 days here and about 5 days here, it obviously broke through a couple times, but for realsies, we haven't been able to get past that, 50-day moving average since we dissected it on the fall from grace here, the big dump after the big pump on the last earnings report. So since August 10th or so, we've been trying to break through once, July 9, or excuse me, September 1. I'm reading that date dyslexic. I have so many learning disabilities, you can't count them all. And then 9/12 to 9/18, it was trying to break through, and then it broke through a little bit. 10/10, and it was trying again till 10/18, and just had that massive sell-off. That was just basically 100% shorting and borrowing. And the longs, in fairness, it wasn't like all naked shorting. Like a lot of that is longs going short long in the earnings because they're very worried about the macro. Now, it turns out Noto greater than macro. Noto greater than macro. And the bad macro, quote unquote, the higher for longer. I mean, SoFi, as long as the defaults don't go crazy, they're just making more money in net interest income. I know they do better with a better economy and more, student loan refis and more home loans and all that stuff. So interest rates going down would be good for SoFi. I know that, but they're doing extremely, extremely well in this high interest rate environment. So, the real reality is they try to kill this company. They not only try to kill it with the regulatory environment, pause in student loans, but then they try to kill it with shorting. They try to kill it with all this FUD, and it just hasn't worked because it's too good a company. The management is too good. The business model is too good. And that's what I was talking about with the valuation, how SoFi and Galileo enhance each other. The fact that SoFi got that bank charter allows Galileo to save them more money. And it also allows proof of concept of new features for Galileo. SoFi is going to kick in this innovation with Galileo, I think, next year, adding business banking, hopefully adding new features, revamping trading, this type of thing. So, other big banks are going to see, this is amazing. So it's going to enhance sales with Galileo. I just think, SoFi getting that bank charter when they did, right under the wire before sort of the clampdown on fintech by the feds, OCC, FDA, whoever the hell all these acronyms are. But Office of the Comptroller of the Currency. What a title. I wish I was a comptroller. People would probably respect my authority. Respect my authority. Um, anyway, guys, that's about all I had for today. So it's not the valuation should not be bank or tech because the valuation should be what the company actually is, which is one of the fastest deposit growing banks in the country. Actually growing at a breakneck speed that is almost unbelievable, going from like almost no deposits now to adding just about 3 billion in just the last quarter. Remember, guys, they increased their deposits 23% just in the last quarter. They increased members 11.5% just in the last quarter. When they tell you that the growth story is not intact, when they try to create this narrative for their short attack, it's just complete 100% FUD and bullshit. Courtesy of the Chia Pet and his ilk, these zero star, always wrong analysts that are simply trotted out there to humiliate themselves and make ridiculous calls where the 5-star analysts are, 14, 12, up in that area. So, Jeffries or one of these companies, like, does Wedbush really think the company is worth 25% of what the actual credible analysts think it were? I don't think like Dan Ives or somebody would make this call at Wedbush, but this clown's, you do what you do. If they can show a drive-in movie on your forehead, how much credibility do you have after all? Because then you got 5 head. And that's no good for anybody. Guys, it's the Sofi Stock. Ticker symbol is SOFI. It's 10 a.m. On Thursday, November 2nd. And I appreciate you tuning in to Un Poco Mas, the show where we give you just a little bit more. SoFi's up 39 cents or 5% on the day to $7.97. Closing in on 26 million shares traded, which for now is kind of moderate volume. Things are slowing down, but if we could be about 40 million shares traded, that would be absolutely perfect. Thank you guys for tuning in. It's Poco Mas. It's Danny Deals. We give you just a little bit more for Hurricane Lopez and Stock Karen. We would like to say a goodbye. Have a great day, and we'll talk to you soon. Peace.